It's now time to talk the latest with CoreWeave, as this name was very frequently discussed yesterday, of course, following the acquisition of CORZ Scientific. Lots of CORZ in both of these company names. But joining us now is Marley Kayden, of course, contributor here at the network. So walk us through some of the pessimism we're seeing, unfortunately, from the sell side today, as two downgrades right now on CoreWeave for another day of pressure, although yesterday actually closing off of its session lows by quite a bit.
Yeah, and pessimism probably isn't fair. They are downgrades, but they did come with price target increases. So short-term pessimism, long-term optimism is sort of the story here. The pair of downgrades come from Mizuho and Stifel. They both downgraded them. Stifel last night, Mizuho this morning. Mizuho's note was a bit more detailed, so we'll cover them a bit more, but both say that they view shares as fairly valued right now. For Mizuho, they downgraded to neutral from outperform, but they raised their price target to $150. That's up from $70. So a pretty substantial mark. We're at now more than 2x. Now, of course, that follows that CORZ Scientific pickup, that $9 billion all-stock transaction that they're talking about. And that's a combination of two significant players in the AI world. So the acquisition itself is being viewed positively, despite the red we saw from both companies yesterday and these downgrades. It's just in the short term, there are some potential issues. So Mizuho does say they view it positively. They note that CoreWeave will allow them to verticalize the infrastructure supply chain while driving significant cost synergies and enabling more financial flexibility. But they do consider the risk-reward profile as balanced right now, because they have a 300% stock price increase since the IPO. So just the last 3 months. So, you know, they're pretty high up there right now. They also said that the price target increase reflects a recent appreciation in comparable company multiples, also the growing demand for AI structure, which we continue to get more data on, and what Mizuho describes as, quote, a means of efficiently acquiring additional capacity at scale. So I know we talked about this a bit yesterday, Jenny, on the show, but they're going to have a lot more capacity at this point with this acquisition. So long-term positive, short-term some issues. Stifel did cite those near-term issues more prevalently. They did their downgrade from buy to hold. They cited near-term challenges despite recognizing those potential long-term benefits. They raised their price target from $75 up to $115. And they did say the repositioning of the company as a vertical data center provider does change their valuation structure, adding they do think they're fairly valued, but short-term there are some potential issues. Macquarie and Barclays have not changed their ratings. Macquarie has a neutral rating, $65 price target. Barclays equal rate with a $100 price target. So pretty wide swing right now from the analysts.
Yeah, that Barclays note obviously kind of reflects consensus too. It's neutral, which is what the majority of the analysts, 72% of those who cover it, have. And the average price target of 19 or so compiled by Bloomberg is right at $100 a share, which is their price target. But I think Greg Moskowitz of Mizuho really highlighted what I think makes this so difficult, and I do not envy. We were talking about this with Circle earlier. We're talking about a growth stock, not a lot of trading history, that moves around a lot in the near term. He highlights this. He said, hey, this is a highly volatile stock. It's going to have risk to the upside. It's going to have risk to the downsides. But they're trying to figure out what is this worth and where will it maybe be trading a year and a half, 2 years from now, a year from now. And as traders and as market commentators, we get stuck in today. And today, this stock's at 150, and we're hearing you just moved your price target up to 150, and we're there now. The other analyst moving it to like 120, and it's like these are both neutral. These are both neutral, but it just reflects how volatile the stock is.
And it's interesting too. You're talking about the valuation. It's so hard to value. They've only been public for 3 months. They've had 300% growth in that time. It's very hard when watching the stock price to have any idea. But right now, I mean, they're trading at significant premium multiples. They have an EV/EBITDA ratio of more than 58 times. So not an easy task for these analysts trying to figure out how to price out this company and this stock. But I guess the overall message is some potential short-term issues. We could see some volatility in the price, but long-term, across the board, everyone seems to view this as a positive acquisition.
I definitely think so, especially because right now, if you look at their revenue, it's heavily concentrated. They have about 72% of their sales derived from Microsoft alone in the most recent March quarter, which is wild in itself. So, well, that does oftentimes work. And I mean, Microsoft is not a bad partner to have. It also then tells you diversification is going to be critical here as we move forward and see a more, hopefully, signs of mature company as it does expand its legs here and continue to trade with more duration than just 3 months. So with all that being said, now as we do look to trade this name and the difficult job of sort of gauging then some of this volatility, I mean, it has had a pretty brutal week now just over the last 2 sessions.
Yeah, I think there's one last thing to highlight too. This hasn't been public that long, and there's a lot of people in the investment banking world who make a lot of money to make sure 300% returns post it going public doesn't happen in a month, because that essentially means all those insiders and those who were in the private investment space just sold their shares pretty early to allow for this to go public, and so they want to value it as close to market value as they can, and so it goes to show just how momentum driven this stock's become.